Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Let's take a look at the global markets. Most of the US market indices ended with a positive bias, up anywhere between 0.5% to 0.7%. Europe also barring for a FTSE, which was absolutely flat in trade. The other indices did manage to do well in trade. Japan is doing well. It's up almost 1.5%. But the other indices like China have managed to cool off significantly. SGX Nifty is trading absolutely flat as flat can be. So there's not much traction that is happening. But the weak cues overall will definitely wane on the SGX Nifty. Remember, it's also the Bank Nifty weekly expiry that is there today because of a holiday that's tomorrow. ADRs also negative cues coming in. Most of the ADRs ended with a negative bias. The big chunk coming in from ICICI Bank, which was down 2.5%. The only exception probably was there, that was Wipro, which was up 1%, and Dr. Reddy's, which moved up close to 0.5% in trade. But the trade setup looks extremely weak. Yesterday we saw selling that came in on the Nifty, was down 100 points. But look at the selling that came on the broader markets. The Nifty mid cap was down 1.5%. The Nifty small cap was down 2%. And this intensifies as far as the Nifty Bank Nifty is concerned, which was down 1.5%. And look at the Nifty PSU Bank, which was down almost 6% in trade, given the fact that the investors didn't like the consolidation that the government has planned within the PSU bank. So that's the traction. Nevertheless, there were some sectors that managed to do well. FMCG as a pack was up almost 1% in trade. So there was traction that was seen. And real estate again continues to bleed. It was down 3.5% in trade. As far as this week is concerned, it's just two trading sessions. But look at the cuts that have come in. Autos down 2.5%. Maruti is not contributing. Tata Motors is not contributing. The Nifty Bank is down 2.5%. And look at the PSU Bank index is down 7% in just two trading sessions. So there is enough weakness that we are seeing as far as the market is concerned. None of the indices in the past two trading sessions have given a positive close. As far as the flows are concerned, FI is heavy sellers to the tune of 1150 crores. DI is minuscule amount of buying that was seen in the market. Now, if you're looking at the contribution and where positions were taken, it was basically the financials. ICICI Bank, SBI and HDFC contributed negatively to the Nifty. Reliance has not been contributing. It contributed a downtick. What only saved was HUL and ITC from the defensive pack. Apart from it, if that was not there, we would have been down in 3 digits for the Nifty. As far as the FNO sense is concerned, there was long unwinding that was seen in the Nifty. Open interest was down 0.5%. But look at the fresh short positions that are taken on the Nifty Bank. Open interest built up of 25% on the short side. Now, even now, since the market is at the 11,300 mark, we are still seeing that 11,400, 11,500 still have put writers which have kept their positions open, which will mean that there could be more potential selling pressure that will come in if the market manages to stay at this level. Just look at the call writing, 11,400, 500, 600 call writers are absolutely strong, which gives an indication that the upside for the market, at least in the near term, looks limited. As far as yesterday's trade were concerned, put writers were forced to cut positions from 11,300 to 11,500, and call writers were aggressive from 11,300 to the same level, 11,500. As far as the FNO ban is concerned, Adani Enterprises was there. Balrampur Chini, which was down 10% in trade yesterday, again comes back in the FNO ban. The Nifty PCR, the Nifty Bank PCR again managed to cool off given the fact that the market is trading rather weak in trade. I want to point out 4 stocks, 2 stocks on the banking space which saw fresh shorts on high open interest build up. So Indian Bank and Bank of Baroda are the 2 counters which saw fresh shorts that came in. And on the long unwinding side, it was the FMCG index. So you had HUL and Jubilant Foodworks which managed to move up on short covering that came in trade yesterday. But these are all the domestic cues that we have for all the top international headlines. Let's go across to Paul Allen.
Japan's exports grew again in August, while strong imports kept the trade balance in deficit for a second consecutive month. The value of shipments rose 6.6% from a year earlier, with import growth of 15.4%, leaving a deficit of $1.7 billion. Japan could be next in President Trump's tariff firing line if they can't reach a bilateral deal. Former Argentinian President Cristina Fernandez has appeared in court one day after being indicted for corruption. The long-running case concerns money laundering and bribery claims. They relate to government contracts during her time in office from 2007 to 2015. Fernandez is currently a senator, a role that grants her immunity. Her supporters say the charges are politically motivated. Tesla has confirmed it's under investigation by the Justice Department and says it's cooperating fully. The criminal inquiry is looking at public statements made by Elon Musk over his original plan to take the car maker private. Last month, he tweeted, "Funding secured," before backing away from the idea. The comment initially sent the stock higher, but Tesla has since fallen by more than 20%. The company, formerly known as ICAP, has agreed to pay $50 million to resolve allegations that it helped banks manipulate a key benchmark for interest rate derivatives. The CFTC says from 2007 through to 2012, brokers helped banks rig what's known as the ISDA fix, a benchmark valuing trillions of dollars in swaps. The unit, now known as Intercapital Capital Markets, doesn't admit or deny wrongdoing. Global news, 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
Non-performing loans is something that's been around for a long time. And I think it's credit to this government that they have actually bitten the bullet and done something about it and brought a law into force to address the issue of distressed assets. But it's not something that's a recent creation. It's been there for a long time. It's just that everyone has chosen to look away and shove it under the carpet. So some of the issues you talk about, I think have been issues that have been around. I think this government is taking the bull by its horns. I don't think there is any legitimate reason why you wouldn't want to invest in India. Of course, you still have some pieces that are still to fall into place, but it's a trajectory that is definitely in the right direction.
Let's pick up on NPLs. Are you then saying that the government has done enough to address the issue? I mean, and if that is the case, why are we still here today? How long will it take before the issue can be addressed?
So you have a new IBC code for insolvent companies. You have a very specific process in place where through a transparent bidding process, these companies can be taken over. And as an impact of that, banks free up headroom to be able to lend as they clean out their toxic assets. Credit from them would obviously, hopefully go up, which is something that we require very much in the country today. Investment in new projects, therefore, should start to look up. And these assets that have been dead for a long time should become productive again. So you have a specific law, you have a process that is laid down, it is transparent, it is, it eventually is a process that is in a sense governed by the judicial system in the country. You could argue that, there are teething issues, but with any large, this is, I think, a very deep reform. I think with any deep reform of this kind, it would take some time before the rough edges get sorted out. And I think we're in that sort of process of the learning curve with this new legislation, but very much in the right direction and very much something that will help cleanse the Indian economy. How long it will go on for, you have lots of, as many views as you have people, but I would think about a year or so.
A year or so, that's not too long from now. So you've been encouraged. What potential do you see? What opportunities do you see?
So we've been pursuing one asset, which is in the cement sector. We really haven't seen anything else which is of interest to us, because none of the assets that are on the block today are assets which are in the sector that we are present in or in sectors that we want to foray into. But having said that, there are many people who are eyeing assets, in the power sector, steel sector, for example, where I think that they would get assets at fairly good values, besides, of course, jumping them forward in terms of size and scale in their particular businesses.
1 month before, the State Bank chairman gave me 25,000 crore check. And he was telling the banker, many banker contacting me, they are offering me the money for that. You go APC mode, we are here to finance you. But it will be difficult for us to finance contractor. This is a problem. Now the bankers are not giving the bank guarantee. Now for the sake of industry, sake of investment, sake of contractor, creating jobs, sake of economy, we need that. We are expecting positive support from the bankers. Now they are giving support, but there is a slow process is going on. I have a meeting with the bank chairman and MDs. I request them. They are supporting. I am confident that in due course of time, this situation will be changed. but we are expecting more cooperation. Our total sector is very secured. I am giving you the example. When I had taken charge as a minister, there was toll project 403, involvement of cost of 3,85,000 crore. We have already solved 99% problems. We have taken 22 cabinet decisions by the blessings of finance minister and prime minister, by which we resolve the issues now. So we save the Indian banks from NP of 3 lakh crores. My ministry has, because of that, the Indian bankers are benefited. Now I am requesting them, there is no risk as far as the road infrastructure project financing. There is no problem. I am going to create more positive confidence in the mind of the bankers, and I am expecting that if they should cooperate, it will be nothing like that. Otherwise, NHI and we don't have money problem. I can raise the money from the market, going with the EPC mode. I will construct the road, and by TOT method, I will make it for foreign investment. I will get my money back. So this is the proven track for me. But in the interest of economy, I am more interested about the investment from the stakeholders, from the contractors, foreign investment, and that is the reason that we need some positive support from the banks, and I am assuring them that don't bother now. 80% land acquisition, we are not giving appointment date. Environment forest clearance, we are not giving appointment date. Utility shifting will be our responsibility. Our 40% hybrid annuity model is very successful. We have already awarded the projects more than 1,50,000 crores in the hybrid annuity mode. So my feeling is now it is to be bankers to be very positive, and we are expecting support from them.
Let's now shift focus and look at the commodity space, starting off with oil prices, which actually managed to gain nearly 1.4% in the overnight session. A couple of factors that in fact played out to this rise was the Saudi comments yesterday, in which they said that they're comfortable with oil near or above the $80 per barrel mark that we see. On the other hand, we are expecting that API will likely report an inventory buildup of nearly 1.25 million barrels for last week. And in case that happens, this will be the first supply that we see since early August. So that will be the negative for oil prices. But shifting focus to the base metal space, the index itself managed to snap its 2-day fall. As far as individual base metals are concerned, we saw a smart recovery in trade for most of the base metals. Copper rebounded on the back of speculation of demand growth and was up more than 2% and ended as the top gainer in trade. Zinc and nickel, on the other hand, we surged more than 1% each, while we had aluminium and lead, which also closed positive on London Metal Exchange, with the exception of tin, which declined for the second straight day. Lastly, as far as gold prices are concerned, we are seeing an extremely narrow range near the 1200 mark, so awaiting more cues on the precious metal front.
Well, a bunch of stocks that we're tracking this morning. To begin with, EMC companies are expected to be in focus on account of SEBI slashing the total expenditure ratio for this for the overall sector, which is expected to impact 25% on the earnings of these potential earnings of this sector, as per the brokerage's report. Also, we're tracking in sugar stocks. They are also expected to be in focus, given that the government is considering financial assistance of around 5,500 crore for overall for this sector, which begins in the new marketing year starting October. Also in our list, we are tracking in MCX, a positive development there, where SEBI has said that the company has taken the first step to open the derivative market to FII. So on back of that development, a positive reaction. Also in our list is Sun Pharmaceuticals, where the company has received the European Commission approval for antibody Ilumetride by Almirall. That's again a positive development for this company, a positive stock reaction that we're expecting. KIOCL, that's we're expecting a negative opening on that counter. Well, the company in the buyback offer is expected to buy around 2% equity at a price of around 170 per share, which represents at least a 26% kind of a discount from the previous market price. Also in our list is Coal India, where the company is going to be buying back its own shares by next month. That's an FE exclusive that we're tracking this morning. And also we have on our list IL&FS Network, where the subsidiary is expected to receive a claim compensation to the tune of around 425 odd crore from NHAI on account of cost overruns for the development of various projects.
But let me take you through the top 5 key highlights of the SEBI board meet on Tuesday. The first one is in the context of the infamous April 10 circular, in the context of foreign portfolio investments and the KYC requirements. Now remember, the HR Khan committee had recommended several changes to that April 10 circular. Those have been largely accepted by SEBI, but what specifically those changes are, we'll have to wait for the final circular. But what the SEBI chairman indicated is that the beneficial owner concept that was brought in the April 10 circular will be applicable only for KYC requirements and not as to the restrictions on the ability to invest in the Indian market by FPIs or NRIs. But yet we have to wait for the final circular on this one. The second important decision that SEBI has taken is to reduce the time period for listing of issues from the current T plus 6 days to T plus 3 days. Broadly, this was an ask by the market participants. SEBI has also said that the UPI or the Unified Payment Interface will also be used in this process. How that process will work is yet to be announced by SEBI. The third important change has to do with the changes to SEBI's prevention of fraudulent and unfair trade practices regulations. In here, SEBI has expanded the scope of its regulations to include employees and agents of employees. These individuals currently in the existing definition were arguably out of the purview of the regulations. SEBI has also strengthened the definition of fraud to include activities such as misleading information on digital media, and some of the experts we spoke with said that this is to target exchange of information on listed equities on platforms like WhatsApp by people who may not necessarily be market intermediaries but play an important role in the market. SEBI has also amended its prevention of insider trading regulations to include who unpublished price-sensitive information can be shared with for legitimate purposes. Currently, this legitimate purpose was not defined under the definition, and the press release indicates a due diligence kind of situation as a scenario where such sharing of UPSI may be merited. They've also indicated that there are going to be additional defenses when trading in possession of UPSI, and the companies will need to lay down a code of conduct and internal controls when they share their UPSI. Again, details on those will be forthcoming once we have the final regulations with us. The fourth change SEBI has made is to its delisting regulations. Currently, the price that was arrived at through the reverse book building process was the final price. SEBI has now said if the promoters don't like that price, they can give a counter offer to all the shareholders. The final change that SEBI has made is consent mechanism. The committee had recommended that egregious violations like insider trading or fraud or front running may also be included in the consent framework, which currently aren't. But SEBI has said that any alleged default that causes huge market-wide impact or affects the integrity of the market, and that will be the yardstick that will be used to assess whether an offence is consentable or not. Again, the details of that will be clear once SEBI publishes its final regulations. Back to you.
Let's also get your check on the top 3 stocks to watch based on the delivery buying and selling as of yesterday. No surprises, all of them from the banking space today. The first one on the list is Vijaya Bank, which was down about nearly 6% in trade and saw delivery selling in excess of 50 crores. The delivery volume surged nearly 250% as compared to its 5-day average, while the total volume surged nearly 357% as compared to its 5-day average. Second stock to watch out for would be Bank of Baroda. This was down about 16.5% and saw delivery selling of 471 crores. The delivery volume more than doubled for itself as the total volume surged nearly 3 times as compared to its 5-day average. Last and final stock, State Bank of India, which was down about 4% and saw delivery selling in excess of 350 crores. The delivery volume surged more than the total volume when compared to the 5-day average.
The big brokerage calls for the day. First we have is Nomura on JSW Steel. Now the brokerage has initiated coverage on the stock with a buy rating and a target price of 484, which suggests a potential upside of nearly 19%. Now according to the brokerage, JSW Steel is a leading player on Indian steel revival, and Nomura is expecting the Indian steel demand to grow nearly 5 to 7% over the next decade on the back of large-scale infrastructure spending and consumption growth. Now for JSW Steel, it will be a combination of cost efficiencies and timely capacity expansion, which would drive the profitability growth for the company going forward. Lastly, the brokerage is also expecting the company's balance sheet and debt metrics to remain strong despite the heavy capital expenditure plans that the company has in future. Second we have is Axis Securities on Sheela Foam. Now the brokerage has initiated coverage on the stock with a buy rating and a target price of 2,039 rupees, which suggests a potential upside of nearly 22%. Now according to the brokerage, strong brand awareness among consumers will give Sheela Foam a competitive edge over its peers. Now product expansion, introduction of low price products with sub brands, and utilizing the know-how to produce higher margin products are all positives for Sheela Foam going forward. Now the company will be setting up a new plant and will also be investing in its existing plant. Now these investments would be supported by a strong cash flow generation that the company has seen in the past, says the brokerage. Lastly, an expected fall in the major raw material prices, that is TDI, will further increase the margins for Sheela Foam going forward, says the brokerage.
North Korean leader Kim Jong-un and his wife greeted Moon at the Pyongyang airport. All red carpet, hugs, and flowers with a complete honor guard ceremony.
There's a whole delegation of 200 people from South Korea to Pyongyang to meet North Korean leader Kim Jong-un.
The two leaders drove through a stunning, lavish car parade, and these citizens of Pyongyang lined up the streets crying out chants, longing for unification.
There's going to be business executives, there's going to be K-pop stars, government officials.
It's a symbolic gesture that an all-around cooperation and economic assistance is possible if North Korea gives up nuclear weapons.
Well, on that very positive note, there's a lot of stories just like that one on the website bloombergquint.com. You should check them out. Here are just a couple that you should read at the moment. The Supreme Court on Tuesday asked Russia's VTB bank promoted New Metal to establish that there was subterfuge by rival bidder ArcelorMittal in divesting its shares in two debt-ridden firms before bidding for SR Steel. And billionaire Jack Ma has sent out a grave warning regarding the trade war between the US and China. He says it's going to last longer and have a bigger impact than most people think. In fact, he said the dispute could last 20 years and persist beyond the Trump presidency. Well, that's all you need to know going into trade today, but up next is Indian Open and a deep dive into everything that you need to know going into trade today. So do stay tuned. This is Bloomberg Quint.